Hola, buenas noches, mi gente. Hey, everybody. Glad you have joined us tonight. I'm just going to talk for a little bit in case there are people who are trying to come into the stream, but it's giving them a commercial. I always hate when like I'm trying to watch somebody's live and it's like giving me commercials and I'm like, oh, I'm missing stuff. So I want to give the people who got a commercial a chance to be here. Hey y'all. I hope everybody is doing uh better than they were doing last week. I don't know. Uh it's been a hard weekend, a hard week for folks like us in the US. And so um, I saw a meme where somebody was talking about that the United States was acting up last week and then had the nerve to expect people to have a birthday party for. And I thought that that was very, very poignant and to the point. All right, Igami. Glad I could be of service there. So hey y'all. Tonight, I know I say this a lot, but I am very excited about tonight's conversation because it has been one that I've wanted to have for a very long time. And my guest tonight is particularly qualified to have this conversation with us. We're going to be talking about life insurance. I've done previously a video on like travel health insurance or travel insurance. And so I've been wanting to do one on life insurance and just hadn't had the right person to talk to. But tonight we're getting ready to take care of that. But before we jump into that, I need to introduce myself in case there are new people here, or there might be a new person watching this on the replay, because hopefully the YouTube algorithm will do what it's supposed to do and get this video to the folks who need it. Um, if you are new here, welcome to the Picky Girl Nation. We're happy you're here. I'm Adelia Aborishade. I was gonna try and do that like head picky girl in charge and do the acronym, but I couldn't think of the letters fast enough. So you just have to take my intent there. I am a financial educator, relocation specialist. I help Black women, mostly Black women, get to be financially confident so that they can live the life they want. And if that life includes living abroad, traveling the world, then this is definitely the channel for them. I have been living outside the US for almost 7 years. In a couple weeks, it'll be 7 years. And so that's the kind of stuff I talk about on this channel: life outside the US, what it's like, how to get there. We talk about money, we talk about travel, particularly solo travel. So if you are interested in those things, be sure to subscribe to the channel, turn on notifications, so that you'll know when I upload a new video and when I have a guest like I do tonight, Miss Candace Austin, who was so gracious to offer to come and have this conversation tonight. We're going to be talking about life insurance. And I feel like life insurance is one of those things that people are like, yeah, I know I need to get it, but they don't like know a whole lot about it. Constance is a licensed insurance agent. She's been licensed for something like 13 years in more than 30 states, but not quite 40 states. So she knows a little something about it. So welcome, blah. Welcome, Candace.
Hi, Adelia. Hi, everybody. Thank you for having me.
And I think some of y'all might recognize Candace. You might be
Yeah.
like, but she looks so familiar to me. She is part of the Exodus Squad.
Yes.
If you're like, I can't figure out where I know her from, that's where you know her. All
Yep.
right. So let's kind of start. I mean, we want to start super, super basic. If, as we're talking, guys, if you've got a question, put it in the chat. I'll mark them because we'll kind of take questions toward the end. Um, and we'll play that by ear and see how much time we have. But let's kind of start with the basics. Like, okay, life insurance. What is it?
Okay. I'm super excited about this. So, we'll start first with what is insurance first. So,
Okay.
insurance itself is a transfer of risk from a financial loss. So, you're taking the risk that you have from a financial loss and putting it onto an insurance company. So, you're transferring the risk. That's insurance. It's the same concept with your car insurance, your homeowner's insurance. So if you are at risk financially, if something happens to your car, you want to take that financial risk and put it onto Geico, right? You want to put it onto the insurance company. If you are at risk, if you live in Florida, you're at risk for storms and damaging your roof. So you want to take that financial risk and get homeowners insurance. So you want to put it onto the company. So with life insurance, the financial risk with life insurance is that it costs to die, right? Something has to happen to your body, right? And so you want to take the burden of that financial risk from your family and put it onto the company. So that's what life insurance is.
I would
So
almost say that in at least when it comes to like the cost of death, that's not even an unknown risk. Like you don't know if your house is going to flood. You don't know, will your car be stolen, but you do know you're going to die,
yes,
and
yes,
dying is not free.
yes. Of all the insurances there are, of all of them, the one you're for sure going to use is your life insurance, right? So when we talk about a life insurance policy, the word policy just means it's a contract. It's a contract between you, the insured, or the proposed insured, and the company says that, in the event when you die, we promise to pay, your beneficiary or the person you're going to leave, the person you designate, a cash payment. So that's life insurance, and a life insurance policy itself, what that means.
Okay. Okay. Um, we often we often hear people talk about like you need life insurance, or this is my least favorite thing that people say is that um getting life insurance is an investment. It's kind of like when people say buying a house is an investment. There are instances where it could be used as an investment, but just the act of buying a house is not making an investment, just like the act of getting an insurance policy, that in and of itself. Because in theory, life insurance, like you said, is supposed to be about covering the cost associated when you die.
Mm-hmm.
And can we talk a little bit about what some of those costs are? Because I don't think,
Mm-hmm.
unless you have had to do this and because I think pretty much all of us know someone who has died,
Mm-hmm.
but all of us have not been the person responsible for taking care of things. And so you may not realize what are some of the costs associated with
Mm-hmm.
dying,
Okay. Yes.
particularly in the United States.
Yes. Okay. So when someone dies, there's probably about 100 decisions that the loved ones have to make. Not only this, the decision of whether the person is going to have burial, traditional burial, or cremation. So we have those decisions that we have to make. So when we talk about traditional burial, today the price of traditional burial is about $10,000. And that really doubles every 7 to 10 years with the cost of inflation. And with cremation, the typical cost of cremation is about $5,000, and that doubles every 7 to 10 years with inflation. And so, when we think about the costs associated with someone passing away, we have to think about transportation of the body. Little personal, my father died in Pennsylvania, and he was buried in North Carolina, so we had to pay the transfer of the body. But even the transportation of the body to the funeral home or to the morgue to the burial site in the casket. So then when you're talking about traditional burial, you have the cost of the casket or whatever vessel the person is going to be laid to rest in. Okay. If they're cremated, we'll talk about an urn, right? We have the tombstone, we have the embalming, we have the dress or the suit, the makeup, the person that's doing the, beyond the embalming, but the person that's, doing the physical attributes
Hair.
of the hair. So when we stand over the person and say, huh, she looks like herself, huh? So we have
That's not by accident. Somebody had to do that.
so we have flowers, paying for the flowers. We have paying for transportation of any family members that's coming from out of town, or if you are coming from out of town, right? You might be in another state when if you're the responsible party to handle someone's final wishes, you may need to pay to travel. So we talk about the pastor. We talk about the funeral home services, flowers that I mentioned, the repast, the obituary.
Because you got to feed people,
Mm-hmm.
or at least that's the expectation.
Mm-hmm. So there's about 100 decisions loved ones have to make upon passing. I didn't even scratch the surface of all the expenses, but yeah, that's most of them.
That
The vessel, the
that
garment.
$10,000 average price, that seems low,
It
because I
does.
feel like,
It is.
was it the last time I was involved with funeral preparations was 2012, and I I'm not gonna say I had to talk some folks down, but like casket
Mm-hmm.
prices,
Mm-hmm. Mm-hmm.
think car prices.
Certainly. Certainly. Yeah, I gave those numbers, the 10 and the 5, they're very, very minimal because there's always someone that says, well, I buried my so and so for 6 grand. Oh, okay. Okay. So that's why we say that. I just say the average because you have different states, right? And different things. Some people really want, you know, to do it big, right? For their funeral. And some people want the minimal. So average, we just say 10 grand for a traditional burial and 5 for cremation.
Okay. Now, one thing that we commonly hear uh a lot, especially in this day and age where we see like GoFundMe's
Mm-hmm.
for people to pay for
Mm-hmm.
funeral costs or what have you. And people will say, well, they should have had life insurance. And I think that a lot of folks think, okay, I've I've signed up for this life insurance policy. When something happens to me, notice I don't say if. We really need to get out of the habit of saying if. It is when something happens to me. The folks I leave behind will have this money and they can pay for all of those things you just listed. Now, does it actually work like that? Do you have to submit receipts to be reimbursed? Do they just cut you a check? Do they send money to the funeral home of your choice? How does that work?
Okay, so when you get life insurance, well, I'm sure we'll talk about process, but part of the process is you fill out an application and submit that for approval from the company, and they give you a policy. Now, within that policy, when you do the application, you list what's called a beneficiary. And a beneficiary is a person that you feel is the most responsible for handling your final wishes, and also the person that, if there's a little bit left over, you want them to receive, right? So when you die, so obviously there are stipulations to everything, but generally speaking, when you die, the beneficiary will call the insurance company or call the agent for assistance, but call the insurance company, and the insurance company will write a check for the death benefit. It is a cash check. Okay. And that'll go to the beneficiary. Usually it's within 48 hours. And depending on the insurance company, you may or may not need a death certificate. It just depends on the insurance company. And so when the beneficiary gets that check, that's a check that they have with with their word to honor the person who died's final wishes. So it's a cash
Okay,
check.
because I was gonna ask about that. Because you said, you know, you're if there's some money left over, they can have it themselves. And I'm thinking, all right, you didn't made me the beneficiary. Is there anything to compel me to use that money to pay for your funeral services? Or
Your
you just
soul. Your soul. I mean, okay, so usually when a person lists a person as their beneficiary, they trust that person. Usually it's their child or their spouse, right? And so when you're
adult children, do
correct,
not list minor children.
you can also list an estate, a trust, or the funeral home itself as a beneficiary. All right, that's the person who will receive the
The
cash check.
funeral home?
I would advise against that, listing the funeral, but some people do that. But please understand that if you have a $20,000 policy and you've listed the funeral home as the beneficiary, your funeral is going to cost 20,000.
Oh, absolutely.
Okay.
Absolutely.
Okay, so if you have a $20,000 death benefit and you list your daughter as a beneficiary, your funeral might cost 12, right? And then the other eight will be yours. So that's the process. The person who, and sometimes remember, there is no life insurance. So someone has to pay for these things. So, people gather money, like you said, GoFundMe's, which you'll, you see my website name. So that's kind of like a play on that. Um, yeah. Mm-hmm. It is.
Uh, and it is okay. I know that I can tell from the comments that this is a conversation that y'all are like, yes, I'm glad we have this. And so if you're here now or you're watching this in the future and you're like, oh, I need a quote, I need to talk to Candace, there are links where you can do all of that in the description of this video. I was
Hi,
on the
Anita.
ball and put them there ahead of time.
Okay.
Black Fire Freedom says, although this discussion is not a glamorous one, it is a necessary discussion. Yeah, and that's one of the things that I like to do is to have those conversations that we're not having enough, especially given the number of GoFundMe's
Mm-hmm.
and barbecue dinners and whatnot we're seeing so often.
One of my good friends, really, really good friends, she started off as my client. This is when I lived in Arizona. Her whole main reason why she is adamant about keeping her policy is because she buried her son. Her son died at a young age to gun violence. And it was just devastating to her to have to, like, she did chicken dinners and fish fries to raise the money. She's like, I do not ever want to have to do that. And so when we talk about life insurance, we certainly we want to make sure that our family can grieve in peace instead of looking for money. They can actually grieve. Um, so it's also a part of our mental health as well.
And again, we said like this is the one thing that you can get insurance for that without a doubt you need.
Mm-hmm.
Like you can gamble. I've had low cost paid off cars where I was like, I'm not getting full coverage insurance because
Mm-hmm. Mm-hmm.
if it gets totaled, I will pay more in insurance than the car is worth. But this is not one of those situations. This is a thing that you will use. Okay, so um, you have to apply to get the policy. We said life insurance mitigates the risk, those costs associated with your death. Now, there are multiple types of life insurance,
Mm-hmm.
correct?
Mm-hmm.
Okay. Um, I know term life insurance is what I was going to say, is that the most popular? But I don't even know if it is.
It depends on the demographic. Um, it depends on the demographic of who you're speaking to, really. Um,
Okay.
mhm,
Well, I think it is important that we know the different types of
mhm,
policies. That way, when you go to talk to somebody, and you don't just show up and say, well, life insurance me, you can have a conversation about a term policy
Hmm.
versus whole life versus what have you. So, can you
Yeah.
explain what term life insurance is?
Yes. So term insurance is insurance that lasts for a term. Exactly how it sounds. So sometimes the term is 5 years or 10 years or even 25 years. The thing about term insurance, oftentimes it's less expensive as far as the premium is for than the other types of insurance, which we'll get into, because it will expire after a certain term. And when that term is over, you will need to requalify to keep that policy. And oftentimes it's at a much, much higher rate than what you initially got it. And you'll have to requalify as far as your health too, because life insurance is based off of your age, your gender, and your health. Now, there are other factors involved as far as your budget and your purpose and things like that. But to when you apply for life insurance, right? When I sit down with you, when we talk, when the agent talks to you, there's a needs assessment where we have a conversation and evaluate what your needs and desires are. You fill out an application. At that time is when you decide whether you want term insurance or whole life insurance. And obviously, I'm able to give a little bit of advisement on that based off my, experience and professional knowledge. So, term insurance is insurance that lasts you for a term, just how it sounds. Whole life, or excuse me, the other kind of insurance is permanent insurance. So with permanent insurance, you can have universal life or you can have whole life. So for the purpose of this discussion, I'll speak on whole life insurance because that's the more popular one. Whole life insurance is insurance that lasts you for your whole life, right?
Okay.
So meaning that it costs you a little bit more, but the premium stays the same. So the premium when you're 20 years old is the same when you're 40, and it's the same when you're 60 up until you're passing. Now, the reason why whole life is cost a little bit more is because you never have to requalify medically for it. And whatever you get
Well,
when you lock in your rate, that's the rate that you're able to keep. There are also some features within the different policies that make them different, like cash value. Um, but that's the difference. Term life is insurance for a term, and whole life is insurance for your whole life.
okay. And so here's the thing, like you just said, term life insurance tends to be cheaper. And something I and you tell me if I'm wrong here. But if you think about insurance, okay, nobody does things out of the kindness of their heart. The insurance company is not saying, yes, pass your risk on to me and I will take care of it. No, in exchange for them handling the risk, you have to pay a premium. Now, if I am the insurance company, I am going, it's kind of like,
This is funny you're doing this because I do this with people in real life. I do this as an agent. So go ahead.
because
I know.
people think these numbers just come out of nowhere.
Hmm.
And it's like, no,
Hmm.
if I'm the insurance company, it's just like when you try and get a mortgage, you're trying to get a credit card. Like, there's a reason people with bad credit get really high interest rates. They are a larger risk.
Hmm.
If you're asking these people to insure your life, if you are a risk, you smoke, you've got a chronic disease, you skydive every weekend, odds are you gonna die sooner than later and they will have to pay out. Therefore, they've got to hedge their bets and be like, well, maybe we can get a little bit more money on the front end versus what we have to pay out. So it's not that those numbers just pop out of thin air. There are what do you call it,
Actuary,
actuaries,
actuaries, yes.
actuaries that are doing lots of complicated math I do not understand
Hmm.
coming up. So they know a
Hmm.
woman who is 45 and, has this kind of health history, what the odds are of you living to a certain age. And so, based on that, that's where those numbers are coming from.
Yeah, you're
So,
spot on.
okay, so with term, because they're insuring you for a fixed term, be that 10 years, 20 years, 30, they kind of, it's almost like it's a safer gamble. I don't know.
Hmm. Hmm.
Versus
Hmm.
permanent insurance, where let's say you get a permanent insurance policy when you're 25. They don't know what you're going to be looking like at 85. So
Right.
they've got to kind of, I don't want to say
That's their
guesstimate
bet.
because there are no
That's their bet.
guesses. Yeah. They're like, okay, so given what we know about you, this is how long we think you're going to live. This is what you're most likely to die of. This is what that number is. And so they have to figure that they've got to do their best estimate of that up front.
Mm-hmm.
Because, like you said, there is no re-qualifying.
Right.
Where, let's say you got a term life insurance policy when you were 20, it was a 20-year term. You look up at 40, you're like, I'm not dead yet. I want to have more coverage, but covering you at 40 is different than covering you at 20.
Right.
Okay.
Because now your life expectancy is shorter,
Yes.
and
You know,
therefore more risk on the insurance company. So what I always tell people is the insurance company is a business. It is not a charity. So I get the most pushback from people who have the most medical conditions, and they're like, "I don't understand. I don't understand." I'm like, "Yeah, like
it's
just for
business.
1 second, imagine it's your money we're talking about here, right? It's your money now. Now you're the insurance company. Who would you rather insure? A 25-year-old woman who takes no medications, or a 77-year-old woman who had recurring cancer and diabetes with insulin and other chronic diseases? Who would you, right? So the moment people start to remember that the life insurance company is a business, it's not a charity, and that you need to get life insurance when the younger you are. Now, it's a lot of women here, so women are less expensive because we take less risks and we live longer than men, right? But the younger you are and the healthier you are, the less expensive the policy is.
Okay. Those are good general rules. If it's something you're looking at getting earlier is going to be cheaper for you.
Mm-hmm.
Now, we were talking about the difference between term insurance and permanent insurance.
Mm-hmm.
Now, um, I'm trying to think of how I want to ask this question. You said that there are some differences between what kind of, I guess, benefits a permanent policy would have versus a term policy. Can you
Mm-hmm.
talk about that a little bit?
Certainly. So one's thinking, why would I get one over the other? Or who would get one over the other? Who, what works for different people? So perfect example of who would get a term life insurance policy. If you remember, we said that term policies, the premium that you pay every month is a lot less expensive than a whole life policy. So therefore, oftentimes people get a lot more coverage. So the perfect candidate for a term policy is a 30-year-old man who is the breadwinner of his family, the provider for his family. And he has a wife and a young child, and they just bought a $200,000 house, and the mortgage is a 30-year mortgage. You get a 30-year term policy for $250,000. So now, when that term is over, when that mortgage is, if something happens to you while you still have a mortgage, your wife and your child can live to pay that mortgage off. But it's harder for an older person to get a term insurance policy because insurance companies not going to offer a 65-year-old a 20-year term, right? What I want you
No,
all to know
because you're
about
going to
term
die before the
insurance is
20
that
years is up.
you are never going to get a term policy longer than what your life expectancy is. Now, we don't know how long we're going to live. Actually, I just found out someone died today, young guy. We don't know how long we're going to live, right? But like we mentioned, there are actuaries and actuarial tables. There's literally people who that's their profession. The company hired them to do the calculations on how long a 25-year-old woman is supposed to live, right? So the insurance company is never ever going to give you a term policy longer than your life expectancy. Never, right? So
I can
anyone,
speak to that. Maybe a year ago, I contemplated getting a term policy. No term, there are term policies that exist that are 40 years. They would not, none of the companies came back with a 40-year term for me in my 40s.
no,
They were like, we will do 20. I think there might have been one willing to do 30, but wasn't
right,
nobody giving me 40 years.
exactly, because statistics say, Adelia, I'm sorry to tell you that, but you might not have 40 more years.
Hey,
You might have
I
30.
know. I've got about 20, 25.
You got
It's
longer than
cool.
that.
It's cool. I understand I'm here for a good time, not a long time.
I
Get
hear
it?
that. I hear that. And the insurance company's like, oh, that girl here for a good time, not a long time. 30 years, 20 years. That's it. Okay, so
So,
whole life insurance is which is a form of permanent insurance. Really anybody can get any there's a scenario where anyone any age can get a whole life insurance. You just want to get the insurance policy, set it up, boom, boom, I'm done. But let's just say that same 25-year-old had a term policy for 30 years and now they're 55. That person should probably go ahead and get a whole life policy while they're still young and can afford it and have relatively good health and lock in their age and lock in their rate and have that whole life policy to last them for their to pay for their final wishes.
now, one of my personal Adelia's things with, let's say, a whole life policy is when I did the math and I looked at like the death benefit versus what I was putting in versus
Mm-hmm.
what would come out. The
Mm-hmm.
math did not make sense to me
Mm-hmm.
in that way. Like I
Mm-hmm.
could do something else with that money, like
Mm-hmm.
for lack of a better term, self-insure.
Mm-hmm.
Um, am I missing something?
No, you're not missing anything. So usually what happens is when I talk to people about whole life insurance, they usually say, well, I can just invest that money and I'll have that money, when I die. So if you ever have an opportunity to do the math on the rate, like the rate you're giving you for how much you want to purchase, you usually don't pay into won't be able to pay into what the policy's worth until you're 100 years old.
Okay.
That's with whole life insurance because they're again, this is the entire insurance companies are companies, right? And they're already prepared for you to say, okay, if you're telling me a $10,000 policy is $50 a month, and they do the math, they're already one step ahead of you. You're not going to pay it. You're not going to sit aside more money than it's worth. If you sit aside the premium that they're telling you for the benefit you're getting, you're not going to sit that aside until you're 100 years old and it's a paid up. That's what's called paid up policy.
Okay. All right.
And
Um,
so for the people, I see the universal life comment. So universal life is a form of permanent insurance as well. It's just it operates a little bit differently than whole life when we talk about the cash value. The cash value in a policy is sort of like a little bucket where some of the premium that you pay goes into the cash value. And with a whole life policy, the cash value builds interest at a small but guaranteed rate. Whereas with a universal life policy, the cash value builds interest, but the interest is based on one of the stock market indexes, like the S&P 500, right? But with either policy, when you take from your cash value, it's a loan. So you have to pay it back, right? And additionally, another difference in universal and whole life insurance is with universal life insurance, the premium that you pay can be flexible. You can pay a little bit more depending on the time of your life or a little bit less depending on where you're at in your life financially. Whereas whole life, the premium is the premium.
okay. Now, um, when it comes to, because term life is pretty straightforward. This is the term, this is the premium, this is the payout. Um, when you get into permanent insurance and whole and universal life and variations of those things that have a cash value, one of the selling points is often you can take a loan on that. Who determines the interest rate on that loan? It's the insurance company, right?
Mm-hmm. Yep. And so when you don't pay the loan back, it will eat away at your death benefit, right? So they'll take the money that you're supposed to pay back and just start to take it from your death benefit. So now your beneficiary will
Because
receive
they're
less
going to get their money
money. They're gonna get
on
their
the
money.
front end or the back
The
end.
best way to win the bet with insurance is to get a whole life insurance policy and pay the premiums. That's it. Just get a policy, pay the premiums. Like when we talked to you and I wanted to make sure talk about the basic concept of life insurance because oftentimes we get into the whole. Can you tell me about investing in this? Mm-mm. Let's understand how life insurance works first, and then we can start to talk about how it can work for you living than dying.
Because because I always question when we and we do this in lots of industries, not to just beat up on insurance, but we do this in a lot of industries. We take something that is one thing and we then start trying to make it be other things. And insurance at its core, like you said, is about mitigating risk. um, and so when we start to do fancy things with it, I get concerned
Me too.
because the average person doesn't have the time, often doesn't know the questions to ask to make sure that what they are buying fits them well.
Mm-hmm. Mm-hmm.
And that's an important thing because, again, like you said, these are businesses. And when you and I chatted, we talked about, like, there are folks in your line of work who be doing some shisty stuff,
The very
like.
most.
And so one of the reasons we wanted to have this conversation and, like, cover the basics, make sure everybody got a strong foundation there, is so that you all will feel more empowered to ask questions and, point things out and stuff like that. Okay. So, um universal whole life, they're both types of permanent insurance. They both have a cash value that, and I'm assuming that this is also kind of like buying a car, where you can customize the policy where the cash value is this and it does this, that, and the other thing. um
That's
but
yeah,
it's
certainly with the
I would
universal.
imagine it's really important that, and we can talk about that a little bit, um, the conversation that needs to be had when you are shopping
Yes.
for insurance.
Yes. Yes. So I'll just talk about my process when I talk to folks. Obviously, you want to make sure you understand where a person's coming from. So you want to understand, their work situation, their financial situation, what, keeps them up at night. You want to know about their family, their children, what they have to protect. Do you have a house to protect? That you want to make sure that your family can inherit. Do you want to leave a little bit of extra money? So a needs assessment or risk assessment is the first thing that I usually do with folks. Get to know you a little bit better, do a risk assessment. And that way we can have a conversation about what, your best options are. And then you do an application. And so with an application for life insurance, you have to apply for it. You don't just say, it's not grocery shopping where you just get it. You have to apply for it. You have to answer medical questions depending on the type and the amount of coverage you want. You have to answer financial questions. Some insurance you can just answer no medical questions. Some you can answer some medical questions. Some insurances you answer so many where they come to your house and do a physical and take blood and urine because you're getting $2 million of insurance, right? And so they want to make sure that you're not at a large loss to the company. So you do an application, we submit it to the company, depending on the company that best suits your need, right? We submit it to the company and we get approved or denied, or we're given other options for different premium rates. And once you get approved, you get the policy in the mail, a real life policy in the mail. And what I like to do is look over the policy with my clients to make sure it's exactly what we said it was going to be. There's no typos, make sure the beneficiary is correct, and then help you store it somewhere in a good place. And after that becomes just the servicing, as the agent just servicing you, keeping contact with you and being there anytime there's any changes that you need to make, just being a liaison between you and the insurance company.
Putting the policy in a safe place is very important. When my mother died, um, I had no idea she had a life insurance policy until the insurance company contacted me because they couldn't find my brother. And
Mm-hmm.
I was like, oh,
Mm-hmm.
there's money. Um, so
Yeah,
yeah,
because they
you
can't just
want to
keep
put
that.
that.
They are gonna
Yeah,
want to pay that money
you
out.
need to be putting that somewhere. Okay. Um, Backtracking just a little bit, we were talking about, like, how you could personalize the policy, um, what some of the things that you could get. Now, um, what are some typical like riders,
Mhm.
add-ons, things like
Mhm.
that people get
Mhm.
with a
Mhm.
life insurance policy? Or what are the options that are available? Because like I wouldn't
Yes.
even know.
So when we talk about these things, what we call them riders for the people who are newer to this language. So when I say riders, we're just talking about added benefits into the policy, right? Just like you can get a plain pizza, or you can get a pizza with pepperoni and onion and mushroom, right? So it's just added benefits onto the policy, right? So some examples of some riders on policies is an accelerated death benefit rider. And that's if you are diagnosed with a chronic illness, they'll accelerate 75% of your death benefit to you while you're alive.
To help pay for medical care in the
Hmm.
United States where chronic illness will bankrupt you.
Uh huh. Uh huh. Exactly. There are riders like accidental death benefit rider, meaning that if you die on accident, like in a car accident, and you have this rider, then your death benefit will double. All right. If you have a $50,000 policy and you have an accidental death benefit rider on there and you pass in a car accident, then the death benefit doubles. This is a great one. This is one of my favorites. There are long term care riders on policy. So I've been doing this for 13 years. And when I first started to do this and hearing about those riders, I didn't like them at first. But as I got older and more mature and understood more, it became one of my favorite benefits to life insurance as a long term care rider. And what that says is that if you need care for an extended period of time, you can use some of the death benefit to pay for the care that you need. Now, the reason why I didn't like them initially is because it's one or the other, right? So you can't have them pay for your long term care and still have the death benefit. But I realized no, the need for long term care is great. And so it can cost a lot of money. And so if there's extra money to pay for that, then I think that's a good thing. So those are just some extra examples. There are so many riders with so many different companies, but those are some of the main ones that you'll hear about.
And I think that goes back to what is the purpose that this insurance money is supposed to serve. Because I saw, where was it? Alexandria MD, if you're concerned about burial and funeral costs, another option could
Mhm.
be to prepay your service. That way
Mhm.
you get to make the choices. Your family does not have to.
Mhm.
Um,
Absolutely, you can do that. One of the things I like about some of the companies that I have when it comes to burial insurance, or what we call final expense life insurance, is a lot of them come with a concierge service where they'll handle that for you when you file a claim, or you'll get a packet where you can fill all that stuff out, right? So again, now your family can grieve instead of having to look for money and make a lot of decisions. I already know what my mom wants. My mom kept is keeping it real simple, right? um, so yes, you can prepay for your services ahead of time, because the death
and
benefit is going to be a cash benefit.
yeah, and I think as somebody who personally faced uh having figuring out how to pay for someone's long-term care, had my mother insurance, like in theory would have been great. But the amount of money we would have hemorrhaged covering her care for the last 5 years of her life, like if it was a choice for me, I'm like, oh yeah,
Mm-hmm.
I can totally see you in eating up the death benefit to pay for long-term care,
Mm-hmm.
because the other option is where's that money coming for a lot of folks. We're not gonna dig into long-term care here, but Constance, I don't want to call you Constance,
My whole life, because
Candace.
Candace Austin put them together. Constance, yeah.
And my brain is bad for putting words together. When I taught, if there was a kid with a last name as a first name, it was a given. That's what I was calling
Uh-huh.
it. My brain does
Uh-huh.
weird things, so I apologize. Candace
Okay.
did an interview about that on H&D Abroad's channel. It is also linked in the description of this video. Look how together I am and prepare with
Wasn't
my links,
expecting
y'all.
that.
All right.
Very
So
nice.
if you
Very
if
nice.
you are interested in that, you want to check out that conversation. Um, there was something else I was going to ask you. Uh,
Can we make sure we touch on? There's been a couple questions about like when you leave your job, so group insurance.
yes, yes, that was one of them because I, for most of my life, I did have a term insurance, life insurance policy, and I intended to keep it after I got divorced. However, I wanted to change the beneficiary. And I don't know if this is a Texas thing, but they were like, oh, you need the beneficiary's uh, permission to remove him because we were married when I made that election.
Yes, yes. Some
And
states
I
are irrevocable.
and I said, hell no, cancel that policy. I ain't talking to that man. Oh
Yeah,
no.
yeah,
Oh no,
yeah,
because
yeah,
had he known,
yeah.
once I said, well,
Mm-hmm,
I need
mm-hmm,
you to
mm-hmm.
do this, it
He'd
wasn't
have
gonna
been
get
like,
done.
yeah,
So
uh-huh.
I saved myself that. So for
I write a
most of
lot of
my life,
policies in Texas, so I'm very familiar with that.
yeah, Texas is a wild place. So a lot of the life insurance coverage I have had has been through a job. Now, let's talk about that because are those policies as good as ones you can get on your own? Then of course there's the whole thing of like if you lose your job, you've lost your life insurance and now you're
Mm-hmm,
older
mm-hmm.
trying to get life insurance.
Right. Okay. So your first question: are they as good? The deal is, if you've got a $30,000 group policy or a $30,000 individual policy, and you die on either one, $30,000 is $30,000. Now, let's talk about a little bit more specific to that. So, when you have a policy on your job, that's what's called a group policy, usually a group term policy in lieu of an individual policy. So, when you have a group policy, you get a group rating, right? They group the whole, employer for this
It's
example
not
together.
just you qualifying for the
Right.
policy, it's a bigger group.
And so therefore the insurance company takes less risk,
That's risk,
right? So
right?
oftentimes they'll give you a lot less expensive premium. But here's the thing. Here's the thing. When you leave that job, because we all need to leave our jobs, toxic jobs, right?
Yes.
When you quit that job, when you leave that job, however you depart from that job, yes, yes, high vibe group policy is discounted rate. Whenever you leave that job, you will get an opportunity to keep that policy at a very, very increased rate, like 10 times more the rate.
It's
And
it's
so when you
like
have an individual policy, it's yours. No matter what you do, job, where you live, it's going to pay out.
let's back up a little bit because like you said, they're spreading out the risk. If I'm an insurance company and I go and your company approaches me and you've got 5,000 employees, there are some super healthy young people that are mitigating the risk for maybe some older people who still work there. And the odds that like everybody's gonna die in a violent plane crash and cost us all of our money very slim. So I can give that company a more attractive rate than you could get on your own because when you apply on your own, it's based off of just you, your
Mm-hmm.
age, your health, what
Mm-hmm.
have you. This was going to say like I never had to do a physical for any of those policies because I'm sure for this very reason. Now, if I wanted to go above and beyond on the coverage amount, on the death benefit, there was a certain amount where they were like, okay, and
Mm-hmm.
here you
Mm-hmm.
need to have a physical or what have you.
Absolutely. Yeah. I don't know if you want me to add on to it, but you're 100% correct with everything that you just said. Um,
Okay.
And even when it's individual, not all the time do you need to get a physical. It's just that there are certain bands. Each company has bands, so to speak. So between up to 50,000, from 50,000 to 100,000, there's different requirements. For 100,000 to 200,000, there's different requirements. So that's when I say
And
band. That's what I mean.
and I would imagine your age plays a role. Like
Yes.
I could imagine that you could get a $800,000 policy at 25, maybe with no physical. But if you wanted an 800,000 policy at 35, they might be like, hold on.
Hmm. What was you doing in your 20s?
Yes. Because again, we've got to remember that insurance companies are companies. Now, we haven't really talked about this, and you alluded to it a little bit. Like, there are different reasons beyond just paying a death benefit that you could use your life insurance for.
Mhm.
Do you want to talk about that a little bit?
Sure. So let's talk about some more of the death part of it really quick. So life insurance obviously can be used to pay for someone's final wishes, funeral, burial, tombstone, or cremation, or lay you on a bed of roses and put you down the river. However you want your final wishes. So the life insurance money can also obviously be used for that. But imagine a scenario where you're able to leave your family money, enough money where they can pay for your funeral expenses, and then they have a little bit left over to say put a down payment on a house, right? And so now they bought a house with a down payment, and the house is worth $200,000 today, but in 15 years it's worth $500,000. So yeah, you didn't get $300,000 from the life insurance, but the life insurance gave you the vehicle to be able to purchase the house, which now has become an investment for you later on. That's just one small scenario. When my father died, I was in college, so I was able to finish college, pay my books, and I did that scenario. I bought a house in Maryland afterwards with the death benefit that I saved my last 2 years of school, right? So the death benefit really can be used for any purpose that we like to use it for. Um, and if they're large, I just spoke to someone on the phone today. He found out his grandson's father died and left him $500,000. I mean, that $500,000 can change a person's life. I know it can change mine. I don't know about y'all out there, but if I'm so that's some of the death benefits of it, right? The things that we can do with the money. Redo our house, right? Get our ready to be redone, and now we can Airbnb it, right? Or buy a new car. Just being able to have a vehicle to be able to now go to and from work, right? So these are the little small things where the difference of having your family have to pay $15,000 to bury you and getting $15,000. That's a big difference. Okay, so that's some of the death benefits. But some of the living benefits, life insurance can be used, like I saw someone mention, as an investment. And I try to stay away from these conversations when I'm educating people about life insurance because they forget the concept of life insurance. So you can use life insurance as an investment if let's say you're a business owner and you earn a high income. You've maxed out all the places you can put your money. So you can't put any more money into an IRA. You've already purchased an annuity, right? Your business owner,
That's
so
the important part of what you're saying. That
what,
part right there.
maxing out your IRA.
Yes.
You're like, let's not
Like,
talk about life insurance as an investment unless you've maxed out your IRA first.
yes. Okay. I want everybody to be clear on this
We're gonna
piece
get back to it, y'all.
because
But yeah, let's get on this. Yes.
people hear investment, and I'm not saying this is Candace, but I've had to come behind some not so honest salespeople who were like, yeah, and you're guaranteed not to lose your money. And people, we are fearful. And so the idea that I can invest and it's a guarantee, first of all, those two things don't go together.
Nope.
So if you're gonna, I just want to underscore this and I'm gonna let you finish.
No, yeah, let's get
If
it.
you are going to use insurance as an investment, you should have already maxed out every other place that you can put your money, which means that for the vast majority of us, this is not
Not,
the way to go.
not. So this is why I avoid this conversation because most of the people I talk to are like me, right? They're black people like me, right? And so and oftentimes I hate to say this, but it's us also talking about this to make it enticing and appealing and so cool and this and that. Stop. If you have not maxed out your Roth IRA and your traditional IRA, let's stop there. Let's go max that out. Let's go put the maximum amount that you can contribute every year into that first. Let's get you an annuity. All right. If you have a job, are you putting how much are you putting into your 401k, 403b, 457? They're all the same thing. It's just what type of employer you have. If you have a
If you
401k,
own a
you work it,
business, are you maxing out that SEP or
or
whatever
you're
solo
right.
401k?
Yes, correct. So that's first. Then, okay, so did we clear that up, me and you? Like, have we made ourselves clear that don't
I
ask
hope
about life insurance and investment unless you've maxed out your IRA and you know what type of mutual funds that you're going to put it into. You understand the difference in your Roth IRA, your traditional IRA, whether it's guaranteed, non-guaranteed. That has to do with tax implications, all that stuff. And then we also can't talk about life insurance as investment if we just don't have regular old life insurance.
okay.
Okay, everybody. All right.
And y'all notice it's not me saying this. Candace is saying this. So for those of you that are just like Adelia hate life insurance.
Mm-mm. I hate it when that happens too. I hate it. I hate it. I'm like, wait, what? So can we talk about it now?
Yes.
Okay. So life insurance can be used in investment. Perfect example. It's going to be in your universal life policies. It's not going to be in your term insurance or your whole life. So the whole concept of buy term, invest the rest, nah. Uh-uh. Whole life policy is more of a set it and forget it. Now, with universal life policy, there are so many different types of policies, right? So, what you can do with a universal life insurance policy is if you're a high income earner, you can pay more of a premium into the policy than what you're owed. So, the life insurance company is saying, you 35-year-old woman, you want a death benefit of $100,000 and it's only going to cost you, $40 a month. But I'm a business owner and I've maxed out all my other financial avenues, right? And so I want to be able to put some money somewhere for some income down the line. So instead of putting $40 a month into the policy, I'll put $240 a month into the policy. And then, 7, 10, 15 years down the line, I'm able to pull some of that money out as sort of like dividends to pay me recurring income.
Okay.
That's the general concept, but it's for high income earners, meaning you have several $100s of discretionary income. Again, after you've maxed out your IRA, your traditional IRA, your Roth IRA, your 401k, 457, 403b SEP plan. That's when we do that. Because otherwise, if we continue these conversations, we're not doing anything but leaving burdens to our family members because we're not getting it taken care of. We're not getting life insurance, and you don't need a bunch. Just get a $15,000 policy and be done with it.
Yeah. All right. Candace is gonna have to go,
I got a
but
few more minutes, so I
okay.
want to make sure
And
we
we've
get
got some questions. But before I forget, I want to say um, she does policy reviews.
mm-hmm.
Like you need to, because some of y'all I know are watching this and you're like, oh, I got a policy and I'm not sure what I got myself into. And you need somebody to go through it with you and talk about, okay, this is what this means. This is what this means. She does that. Um, she's got a site for quotes. She does consultations. There are links for all of those things the in the description of this video. Um, you want to take a few questions, or is there
Can
something
I
else you want to
touch
say?
touch on a couple more things that I wanted to make
Okay.
sure we talked about? Okay, so when we talk about life insurance and we're talking about the money, the death benefit money, life insurance and annuities, because they're in the same category financially, life insurance and annuities. I see you, Egami. Life insurance and annuities, they are the only financial products that pass through probate. Meaning, if you have debtors and creditors and liens, right? You know, uh, uh, your IRA and all that's going to go to your estate, and so anyone that you owe can lay claim to that money. Where life,
Unless you name a beneficiary, which is why on this channel, that's what we do. Anything that you can list a beneficiary on,
you list the
do that.
beneficiary.
Because when she
Yep.
says it goes by probate, that means that money goes to the person you have named. It doesn't have to, the court doesn't have to settle your estate before those people can get their money.
And also, the IRS can't touch the money; it's tax free, so you don't have to pay taxes. Your beneficiary, won't have to pay taxes when they get that check. I wanted to make sure I talked on that. Um, okay, yeah, now we can get to questions. I just wanted to make sure I touched on all those like definitions and things like that.
Okay, Monica wants to know, I'm single and I don't have dependents. Do I really need life insurance even if I pay for my cremation in advance?
Do you need it? No, probably not. But I would say, you have to keep in mind there might still be some other small financial things to pay for. Or, if the person who's handling all your cremation, maybe they're out of state. Maybe they're in California and you died in North Carolina. At least pay for a flight. Get a $2,500 policy. Um, and sometimes life insurance isn't just to pay for things. Sometimes it's to say I love you, because I'll never forget that. And I speak from personal experience because my mom said, obviously we're upset. She's like, your dad my dad had two policies. Your dad may have passed away, but he had stuff in place. So I just want you to know that he loved you. Like he loved you. Here, go to check. So sometimes it's just to say I love you.
Okay. Auntie Luke wants to know, if you pass away in another country and decided on cremation, do they have to still transport your body back home to get cremated? No.
No.
This is a conversation I have had with my child, not to bring my body back to the US, because I
Yeah.
know that's folks' default thought.
Mm-hmm.
And I'm like, you don't realize how much that costs.
Mm-hmm.
If
Mm-hmm.
don't do that, cremate me where I am and put me in your carry-on and be done.
And be done. My mom says, "Girl, don't you put like she wants to be cremated." She says, "Girl, don't you put all that money into the ground." So I'm like, "Okay, mom, I got it. I got it. I got it." So
This
no.
is a good question. If the term life insurance, the term ends and you don't want to renew, do you get your money back?
Nope. That's why it's a risk. That's why term insurance is a risk.
And that's also why it's cheaper,
Mm-hmm.
isn't it?
Oftentimes, when you need it the most, is when you can't qualify, and it's usually when your term expires. So no,
Okay.
these
Um,
are great questions.
is it beneficial to have more than one whole life policy for the cash benefit?
You mean like for the death benefit? I mean, if you want, is it more beneficial? Yeah. I mean, if you want to leave
I
10,000.
don't I don't think that's what they mean. I think they're conflating universal life with the cash value. I think, high vibe, you tell us if I'm right or not. I think she means cash value.
For the cash value, I mean, no, not unless you're planning to borrow from one of them, but it really wouldn't be beneficial to you to do that. Sorry, there's an ambulance outside. Um, so for the cash value, no, 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 no,
Okay.
no, because
Okay, yes,
you're
that's
not. Often another thing I want to make sure I don't put too much emphasis on the cash value to people. I've mentioned it because it exists, but it's not the premise of why you're getting the policy. And you don't want to plan to ever use the cash value. If you're using the cash value in your policy, it's an emergency. You don't have any other money, and now the policy you've been paying for, like you're gonna, use the
but
cash value,
but
which loan, which must be paid back.
I think it's because some folks lead with that
Right.
when they are selling them. And again, that's not why you bought the policy. And also, think about it from the business perspective. As the insurance company, is that cash value going to be lucrative enough? Like, because it doesn't behoove them to make it very lucrative for you.
No, no.
And
The
I
best
think
bet
that's
for you is to get a policy, pay for it that you can afford, always within your budget. Because if it's not within your budget, it doesn't do you or your family any good. So get a policy that you can afford, pay for it, right, and just keep it. That's it.
just it don't have to be fancy.
No, no, I saw that earlier. No, 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 no. But we usually do have what I call the senior cocktail: diabetes, high blood pressure, cholesterol. Y'all know
The
y'all. Some of
ways they
y'all
can.
lisinopril, atorvastatin, simvastatin, carvedilol, metoprolol. You know what I'm talking about. You
Oh
know.
goodness.
I could go on with the high blood pressure, cholesterol, diabetes. No, but oftentimes we have the cocktail. But no, there's no charging different for races. Just
Okay.
age, gender, health.
Now, but I would that doesn't play into the actuary tables.
Yeah, that's what the actuarial tables are doing it based off of your age, your gender, and then they obviously have different things with health. But yeah, they start with your age and your gender. Yep.
Okay. I don't know what this is, and I don't know if you know what this is.
Yeah, I know what it is. I wish it wasn't a thing.
Okay.
What was the question? I'm not sure the question. Just no, no, no,
How do
no.
you feel?
That's how I feel.
Okay.
No.
Okay.
And
Um,
again, the people who are talking about infinite banking, they're not licensed insurance agents, so they don't know. They don't know how it works. They don't see the inner workings of an actual policy, right? We're talking about cash value and using something that is not really supposed to be used in your policy. So no, this gets
and
back to maxing out our other financial avenues and making sure we have something to not be a burden when we die first. Then once we do that, then we can start to talk about because if you're doing infinite banking, you're probably poor. You're probably broke. Sorry.
and
You might have
okay,
people coming at me in
Candace
seconds.
just said they're probably not a licensed insurance agent. That's the other thing.
Mm,
If
mhm.
somebody is selling you insurance, they need to be licensed. If somebody is licensed, that means that there is an organization, somebody keeping track of complaints,
Mhm.
and they have to have certain amount of training. If you are unhappy with someone that you dealt with, you should be able to lodge a complaint
Yes.
and you in with their license number. Is that correct?
Yes. So when
Yes.
you
So when you
every agent
every
has a license number
the
with the
license
state.
number
So okay, no, let's stop at the top.
stop at the
You
top.
have an
You
NPN
have
number, national producer number. That's like your national producer number, like your social security number, right? And then you have a license number with the state that you're licensed in. Sometimes your license number in that state is the same as your national producer number. Some states matters the
Some
same.
states matters the
For
same.
other states, they're
Other
different.
states there
And then you'll also have an agent
also
ID
have an
number
agent
with
ID
each
number with
company
each
that you're
company
contracted
that you're
with. So I'm
contracted with.
contracted with a lot of different companies. So I've got a different agent ID number for
Different
each
agent
one.
ID number for
And
each
you're
one.
more than welcome to ask your agent for any of those numbers. Since I do a lot of it over the phone, I give those numbers so people, you're giving me personal information. I'll give you mine too. And you can look me up. You do whatever you need to do. Also, that information is in the policy. Every single thing that I've mentioned is in if you've got a life insurance policy sitting at home, everything that I've mentioned today is in that policy, down to the application that you wrote. And so let's get back to the agent. Additionally, to be a licensed life insurance agent, you must take an exam. You must pass an exam with a 70% or better. They do a background check, criminal check, and all these things. The specific details, I don't have them all. I don't have a criminal record, so I just answer the
Record. So
question.
I
But
just
they
answered the
do
question.
ask about, like, child support in arrears, and have you done, like, financial crimes, and also felonies. They ask about all those things to become an agent. Again, I've been licensed for 13 years. I am getting more states, so they do ask these things, but I'm a no to all those questions. So they ask about criminal and financial background. You have to take a test. There's a background. Additionally, each company has to, like, give you the approval to offer. You have to get contracted with each company. So some insurance agents are what's called captive, meaning they work for one insurance company, and then some insurance agents are brokers, so they can work with multiple insurance companies, and that's what I do. I work with multiple insurance companies in order to find folks the best coverage at the lowest price based on their situation.
Okay.
So, one other thing you and I talked about that I want to touch on, it is your insurance agent's responsibility when they decide to become an agent and agree to the contract with the insurance company and the group that's allowing them to have the contract. They are responsible to act in your best interest. They're responsible to act in your best interest, not what they say. So I'm not going to come to you and say, "Hi, Adelia, my name's Candace. I think you need to know about infinite banking." I don't know anything about
Okay.
that.
Because that's what I was going to ask. So what they're saying is they should not be selling me a policy that I don't need. Like
Correct.
it, the recommendations they make should be based off of my situation and my needs.
In fact, some policies, like the larger ones, they ask, if is this in the best, are you acknowledging that this is in the best interest of the applicant or proposed insured? Same thing. Applicant, proposed insured. Yeah, they ask. So I've had my license for 13 years, never had a single complaint. I'm licensed in 35 states. So wow. It doesn't do you or me any good for you to get a policy that you can't, that doesn't do you any good.
Okay. Do you need to go or do you have time for a couple more questions?
A few more questions and then I probably should get going.
Okay. I thought this was an interesting question. Is life insurance FDIC insured?
No, their life insurance is covered by the Guarantee Association. That's a great question. No, so banks are FDIC insured. That's another way that insurance scam people. They say this is FDIC insured. No, the Guarantee Association. So the way your life insurance is protected. So let's say life insurance company A, you have a policy with them, and they lose their accreditation. They go bankrupt. They whatever. The way that looks to us is we'll see, oh, CVS bought Rite Aid. Okay, or they're merging. A company will buy all those policies, and then your policy will just be under that new company that purchases those policies. So that's the Guarantee
Okay.
Association.
Because
Essentially, but it's not FDIC insured.
somebody else had asked a question like, what happens if you've got a policy with this company and they go under or what
Yeah.
have you?
The company who purchased them is now responsible for that contract, or the Guarantee Association will pay you out up to $250 worth of coverage.
Yeah, that's where that I knew I saw that question somewhere.
Yes.
Okay. Let me, because this goes with a question that Auntie Lou asked as well. She was like, what's the best way to buy insurance? F Doctor wants to know, like somebody like Policy Genius,
Mm-hmm.
are they trustworthy?
Okay, so Policy Genius, just like anything else that you see online, they're going to just be a larger entity who's created this internet thing called Policy Genius, where they give you access to get a quote. And then those agents that work for Policy Genius are just going to shop around with all the different carriers to find you a quote. So Policy Genius itself is not the insurance company. They're just the people who are going to shop around for the quote.
Okay. All right. I think we need to let you go
Okay.
so that you are not late. We are very appreciative that you stopped by tonight to have this conversation because I think, as you can see from the questions, this is something people want to know about,
Mm-hmm.
but it's very hard to get educational takes and like
Mm-hmm.
unbiased uh,
Mm-hmm.
because folks always be trying to sell you something and
Always be
not
trying to
like
sell you something.
listening to what it is you're trying to ask or what it is you're trying to say. So we appreciate you stopping by and sharing your wealth of knowledge with us. As I mentioned before, um, all of Candace's links are in the discussion, not discussion, description
Mm-hmm.
of the video. Um, And if you have a particular interest, because I saw a question down there about long-term care insurance, she did an interview with H&D Abroad, and there is a link to that video in the description of this one.
Mm-hmm.
So if, yeah, thank you for being here. And
Thanks for having me.
I'm gonna let you go because you need to get out of the door.
Yeah, I do. Hi, ladies. I see you guys in there. It's great to see you guys. Hi, Anita. Hi, Teresa. Hi, everybody.
I need to say some wrap up things, but you need to go.
Okay, so do I just go?
No, just wave. All right. So hopefully y'all enjoyed that. I found it to be very educational. I just wanted to, what am I, something I'm supposed to be reminding you of. Oh, if you are wanting to do the Get Started Investing Challenge The next challenge starts July 16th. Sign up is available now. You can go to, do I have a link? You can go to getstartedinvestingchallenge.com and register for that. Um, I'm trying to think, is there anything else I need to tell y'all? I can't remember. I've got a little bit of vacation brain. I I'm trying to think. I can't remember anything else. Okay, so I'm going to go because I can't remember anything else. But I did want to remind y'all that registration for the challenge is open. Oh, next week we are going to next week, yes, July 6th, the investing challenge starts. Next week, we are going to release the dates and locations for Reclaim the Retreat for 2024. We're going to release those to the public. If you were on the wait list, you need to go check your inbox because you got an email today. And ladies are already signing up. So reminding y'all of those two things. Maybe there is something else I'm supposed to remind you of, and I have forgotten. That is quite possible. So yeah, thank y'all for the support on Monday's video. Um, uh, I don't know. I was in a mood. So I made that move oh, okay, legacy builder. Yes, the people on the wait list can register for Reclaim the Retreat. This is why we told y'all last week, get on the wait list, that the people on the wait list, we're going to get priority. Y'all have an email in your inbox today. Next week, we are going to open, assuming there are still spots left, we're going to open it up to the public. So thank y'all again. If you're not subscribed, subscribe. If you like this conversation, hit the like button because I'm really hoping that this particular conversation about life insurance, in our community especially, is necessary. So I'm hoping if enough of y'all like this video, YouTube will do its thing and get this video into the stream of more Black women. Good night, everybody.